Good morning and welcome to class. In this section, you will learn reducing balance method of calculating depreciation. Grab your writing material. Let's bring those numbers into life. What is reducing balance method of calculating depreciation? What is reducing balance method of calculating depreciation? The reducing balance method of calculating depreciation is a method in which a fixed percentage is written off of the diminishing value of the non-current asset annually. I repeat, the reducing balance method, otherwise called the diminishing balance method or the written down value method, is a method in which a fixed percentage is written off the value of the non-current asset annually. A fixed which I mean a fixed percentage of the value of the diminishing value of the non-current asset is written off annually. That is what is meant by a diminishing method of calculating depreciation. As the book value reduces every year, the depreciation expense also reduces. This is because the fixed percentage is written off of a declining net book value of the non-current assets. Now, the key characteristics of this method is as follows. One, depreciation is higher in the early years and lower in the later years. Depreciation is higher in the early years and lower in the later years. That is one. A constant rate in percentage is applied. A constant rate of depreciation in percentage is applied. And depreciation is charged not on the net book value and not the original cost. That the depreciation is charged on the beginning book value. The next one is another character is asset value never reduces to zero unless it is disposed of. Now we are going to take a look at the formula of calculating used in calculating the reducing balance method. There are two formulas. The first formula is applied when the rate of depreciation is given, and that formula is depreciation is equal to beginning book value multiplied by the rate in percentage. Beginning book value multiplied by the rate in percentage. That is BBV multiplied by the rates, where BBV means the beginning book value and R is what the rate. This is the first formula used in calculating the reducing balance method of what depreciation. BBV times R. BBV means beginning book balance, while R means the rate of depreciation expressed in percentage. Let us take the other formula. The other formula is used when the rate of depreciation is not given. And in this case, you need to first of all find the rate before you can calculate the depreciation. And that formula, which is formula 2, is 1 minus open bracket and close S over C raised to power 1 over n. I repeat again, r is equal to 1 minus s over t, x over c raised to power n, where r is the rate of depreciation expressed in percentage. R rate of depreciation expressed in percentage. S is the salvage value or the scrap value. Salvage value or the scrap value, that is X. Then C is the cost of the non-current assets. C is the cost of the non-current assets. And N is the estimated useful life. N is the estimated useful life. N is the estimated useful life. Now, this formula R is equal to 1 minus S over C raised to power 1 over N is written in is can be given in another form, but both of them mean the same. That form says that R is equal to 1 minus S over C as R is equal to 1 into the nth root of S over C. R is equal to 1 minus the nth root of x over c. That is the second formula. These two formula, the one in the orange color and the one in the blue color, they are the same. Those people that are preparing for university matriculation examination or advanced professional accounting exam must take note of this formula. Normally, those in the secondary school are not required to find the formula, but those preparing for university matriculation examination, those are preparing for advanced or professional exam in accountancy, must take note of this formula. Now, formula A and formula B, that is the one in orange color and the one in blue color, they are the same. That is to say, the nth root in formula B is the same thing as x over c raised to power 1 over n. The nth root you are seeing there is the same thing as 1 over n. So if you do not put the nth root there and you put it x over c raised to power n, it means the same thing. It means the same thing. So formula A is the same thing as what? Formula B. Formula A means the same thing as formula B. Now let us take a work example. We're going to take a work example to see how this formula works. Now, first work example 1. A machine was purchased for 500,000. Depreciation is charged at 20% per annum using the reducing balance method. Calculates the annual depreciation. Now, for us to calculate the annual depreciation, we have the rate is given, and the cost is given. Those are the only two things we need. Now we are going to prepare what is called the depreciation rates, where we have the year at the beginning book value of a non-current assets, depreciation rate, always expressed in percentage, then the depreciation itself. Next is the accumulated depreciation. Next is the closing book balance or the net book balance. The closing book balance or the net book balance. So the facts here, the beginning book value, which is the value of the non-current asset, is 500,000. And the rate of depreciation as given in the question is 20%. Now, depreciation is, what is depreciation? Depreciation now is 20% times 500,000. 20% times 500,000, which is going to give you 100%. Then the accumulated depreciation for that month is 100,000. That is the same thing with the depreciation. Is accumulated depreciation is 100,000. And the closing book value is 500,000 minus 100,000, which is what? 400,000. Now, the second year, the closing book value for year one is the beginning book value of year two, which is what? 400,000. And the depreciation rate remains the same, which is 20%. And 20% of 400,000 will give you 80,000. That is 400,000 times 20%. Then the net book value, I mean the accumulated depreciation will be 80 plus 100,000, which is 180,000. And the closing book value will become 320,000. The closing book value for the second year is the beginning book value of the third year, which is what? 320,000. And the depreciation rate remains the same. 20% times 220,000 will give you 64,000. And the accumulated depreciation will be 64,000 plus 180,000, which is 244,000. And the closing book balance will be 320,000 minus 64,000, which gives you 256,000. Now, this is the 3 years that we expected to calculate the depreciation. What we observe there is the depreciation for the first year is 100,000, that for the second year is 80,000, and that for the third year is 60,000, showing a decline. And the accumulated depreciation 100,000 for the first year. Accumulated depreciation for the second year is 180,000, and the accumulated depreciation for the third year is 244,000. Now, the closing book balance for the first year is 400,000. The closing book balance for the second year is 320,000. And the closing book balance for the last or the third year is 256,000. Now, there are a lot of questions that may crop up from this depreciation schedule. A lot of questions may crop up from this depreciation schedule. And question like, what is the value of depreciation in the last year may come up. A question like, what is the depreciation for the third year? What is the value of the depreciation for the third year? The value of the depreciation for the third year, according to the depreciation schedule, is 64,000. Take notes. Various other questions may come out, may crop up from this schedule. And another example of the question that may crop up is question 2. The book value for the third year, for the third year is the book value, that the net book value for the third year is what? 296,000. That is the net book value for the third year. These are objective questions. Now, another question that may likely crop up from this schedule is question 3. The accumulated depreciation for the second year is, you go to the column of accumulated depreciation and we discover the accumulated depreciation for the second year is 180. 180,000. Now, the fourth question that may be um, asked from this schedule is, what is the beginning book value for the first year? The beginning book value for the third year is 320,000. So there are so many questions that may crop up on this schedule. Learners should be mindful of them. Work example 2. Work example 2. Work example 2. We are going to take a second example to demonstrate the calculation of reducing balance method of depreciation. The question reads, a plant costs 12,500 naira. It will be kept for 4 years, that is 4 years, and then be sold at scrap value of 520. Using the diminishing balance method of depreciation, calculate the depreciation charge for the second year. Depreciation charge for this question, we are not given the rates. The rate is not given in this question. Since the rate is not given in this question, we are going to first of all calculate the rates. And the rate is calculated with the formula that was given before, which is rate is equals to 1 minus x minus c raised to power n, where r is not known. Then the scrap value is 5,120 and the cost is 12,500. So we are going to replace those figures in the formula and calculate the rate. So it is the rate that we will calculate now. After calculating the rates, then we go and prepare the depreciation schedule. So this invariably will become R is equals to 5120 over 12,500 bracket open and close raised to power 1 over 4. Raised to power 1 over 4. Now, what you will do in this place is this. You will notice that what we are going to do here is, you first of all do the division. First of all, you do the division first. That is 51 over 2 over 12,500. We are going to apply what is known as BODMAS. Bracket first, we do the one in the bracket first. After doing the one in the bracket, then we take the root before we minus the result from 1. So there we go. So 5,120 over 12,500 will give us 0. We give us, no, that one is 0.496. It is 0.496 raised to power 1 over 4. That one is 0.496 raised to power 1 minus 4. 4 minus 1. That is, the rate now is equals to 0.2. And the rate is always expressed in percentage. So it's going to be 0.2 times 100 over 1. 0.2 times 100 over 1 will give us 20%. So we have calculated the rate to be 20%. So having gotten the rate to be 20%, then we are going to prepare the depreciation schedule. But know that 0. 4096 raised to power 4 minus 1 is the same thing as 0.4096 raised to power 4 then minus 1. And this last one here is trying to explain to you how you will use your calculator to get that 0.2. What it's saying here is that 0.4096 in your scientific calculator, after putting 0.496, you raise it to power 4. Raise to power 4. After raising to power 4, then you press the x minus 1 button. Immediately you press the x minus 4 button, what it would give you is a 0.2. That is to say, to use your calculator to solve this, you say 0.496 raised to power 4. After pressing raised to power and 4, then you press that button in your scientific calculator that says x minus 1, which will automatically give you as 0.2. And 0.2 expressed in percentage will give you 20%. Now we are going to prepare the depreciation schedule. Now we have been able to calculate the depreciation rate, which is 20%, and the cost price is known, which is 12,500, and the scrap value is also known, which is what? 5,120. Now we have the year. The first column is the year, the second column, beginning book value, the rates, the depreciation, accumulated depreciation, and the closing book value or the net book value. Now, in the first year, the beginning book value for the first year is the cost, which is 12,500, and the rate is 20%. And the depreciation now is 20% multiplied by 12,500, which is 2,500. Then the accumulated depreciation remains 2,500, while the net book value is 12,500 minus 2,500, which is what? 10,000. Now, in the second year, the closing book value for year 1 is the beginning book value of year 2, which is 10,000. And the rate remains the same, 20%. Now, 20% times 10,000, we have depreciation as 2,000, and the accumulated depreciation will be 2,000 plus 2,500, which is what? 4,500. And the net book value will become 10,000 minus 2,000, which is what? 8,000. Now, the third year, the closing book value for the second year is the beginning book value of the third year, which is 8,000. 8,000 times 20%, that is 8,000 times 0.2, will give you 1,600. 1,600. And which is the depreciation for that third year. Then the accumulated depreciation becomes 1,600 plus 4,500, which is 6,100. Then the closing book value becomes 8,000 minus 1,600, which gives you 6,400. Now in year 4, the closing book value for year 3 becomes the opening book value of year 4, which is 6,400. The rate remains the same, which is what? 20%. At 20% times 6,400 will give you 1,280, and the accumulated depreciation becomes 7,030 5,380, while the net book value becomes 5,280. That is the fourth year. You must observe here now that the closing net book value is 5,120, which is equivalent of the net book value as stated in the question. When you prepare depreciation schedule, then your closing book value must be the same with the one estimated net book value or scrap value as shown in the question. Now, the question that is asked in this, um, what we are asked to find now is the depreciation for the second year. Now, are you going to get the depreciation for the second year? You trace it, you trace this depreciation to the second year, and the second year depreciation is what? 2,000. The second year depreciation is what? 2,000. So depreciation for the second year, the depreciation for the second year as required by the question is 2,000. Depreciation for the second year as required by the question is 2,000. Now we are going to take a classwork to assess you whether you are flowing with us. I will want to know the extent to which you are flowing with us in this tutorial so that we know whether we are going to keep explaining or we are good to go together. So the class practice. In this practice, the viewer will be also doing the classwork, while those 10 students in the class now we also do the classwork. And this practice is going to take a duration of 3 minutes. Immediately it is 3 minutes, you'll be pens up. And the first four that will submit their answers will be assessed. After assessment, then we talk about the solution. Now, this is the question. On January 1st, 2020, Sky Great Venture Unlimited purchased a machine at the cost of £200,000 with a lifespan of 5 years and a residual value of £47,400. The company policy is to depreciate machine on reducing balance method. Okay, on reducing balance basis. You are required to, what are you required to do? One, you are required to uh, depreciation rate, to calculate depreciation for the third year, then accumulated depreciation for the fourth year, and the residual value at the end of its useful life. This is the question. It is 3 minutes. Your time begins now. Your time begins now. As you watch this video, if you find anything benefiting in this video, do not hesitate to share this video. Do not hesitate to like the tutorial, and do not hesitate to share our tutorial so that others like you will benefit from the tutorial just as you've just benefited from it. Immediately it is 3 minutes, you will pens up, and the first student that will submit their tutorial will be assessed. We are not going to assess more than 4 students. We only assess the first 4 students. Like a dove. If I am the wind like a dove, I will fly, fly away over the mountain. Scholars are waiting for me. If I have a wing, I could do. Endeavor always to do practice. To know account is to do accounting. Our practice make perfect. If you are learning anything without practicing, oh, you will not get it. It is practice that makes perfect. So to know accounting is to do accounting. So always endeavor to participate or to try or attempt any classwork or assignment given to you. This assignment given to you, you'll be able to assess yourself whether you are flowing with the tutorial. Pens up, pens up, pens up. The first for Monica, Francis, Akasmia, Abdul. That is all. That is all we can take. That's all we can take. So let us assess that. Say the first question is 12, is 25%. Second one, third one, correct. The fourth question is correct. Monica has scored 4/4. Now, Francis, first one is correct. Second one is correct. The third question is correct. And the fourth question is also correct. Francis scored 4/4. Kashmir, the first question correct. A second question, okay. A third question, okay. The fourth question, oh no, he couldn't make the last question. So he scored 3/4. Abdul, correct. Second question, correct. A third question, correct. And the fourth question, oh no, Abdul and Kasmia couldn't make the number 4 question. So why were they not able to make it? Is the question so difficult? Let us find out. Now, solution. The first thing we need to do is to calculate the rate, which is calculated with the formula R is equal to 1 minus x over c raised to the power 1/n, where s is equals to 47,400 and cost is 200,000 and n, which is the expected useful life, is 4 years. Is 4 years. So which is first 47,400 over 200,000 raised to power 1 over what? 4. Okay, is it 5? Okay, 1/5. Then which is the same thing as 1 minus 0.237 raised to power 1/5, which is equals to what? 1 minus 0.75. Now, let us explain something here. You discover that when you use your calculator to calculate 0.235 raised to power 5 minus 1, raised to power 5 minus 1, you will not get a whole number. You will not get a round up number. You will get a 24.99 something. You will not exactly get 25. That point should be noted. And when you did not get a round number like 25% exactly, or 24% exactly, and you are now getting 24.999, then you will not use that rate to calculate the last year. As you can see as you can see what we are going to do next. If it happened like that, that your percentage rate is having 24.9, 25% point something, and the rate is not a round figure like 30%, 20%, 25%, 23%, then you will not use that rate to calculate your last year. Instead, you are going to use beginning book value of the last year minus the scrap value as given in the question, and that will give you the depreciation. This is to avoid any uh, roundup discrepancies that will appear that may um, disturb the balancing of the balance sheet, because the net book value is an item of the balance sheet. If it's not properly dealt with, or if it is not accurate, the balance sheet will not balance. So let us go ahead and see what we are trying to explain. So you have 25%, though it was not exactly 25%, it was 25.99 something. So after getting 25% as the rate, so let us go and prepare the depreciation schedule or the non-current asset schedule. That is what we are going to prepare next. And that one is, we begin from the year, then uh, the beginning book value or the cost for the first year, then the next year beginning book value, then the rate of depreciation, the depreciation amount, the accumulated depreciation, and the net book value. In 2020, at the cost of the item, the non-current asset is 200,000, and the rate of depreciation is 25%. Now, depreciation now is 25% times 200,000, which is 0.25 times 200,000. That gives you what? 50,000. And the accumulated depreciation for the first year is 50,000. While the net book value is 200,000 minus 50,000, which is 150,000. Now, at the second year, which is 2021, the net book value becomes 150,000. Then the rate remained the same. The rate remained the same, which is 25,000. Then depreciation amount for the second year is 37,500. And this will automatically give you uh, 87,500, which is 500, and the net book value will become 82,500. 2022, the net book value becomes 82,500, and the depreciation rate is 25%, and the depreciation is 25%, which is 0.25 times 112,500, which automatically gives you 28,125 at the depreciation for year 2022, and the accumulated depreciation becomes 115,625, while the net book value is 54,175. Then 2023, the closing book value for 2022 is the beginning book value of 2023, which is 84,375. And depreciation remained the same, which is 25%. 25%, which is 0.25 times 84375, will give you 21,094. And the accumulated depreciation will give you 136,719. 136,719. Why the Net book value will give you the net book value. Now we begin the beginning value of 2024, 1, 2, 3, 4, 5, which is the fifth year, which is 63,281. Now, how are we going to calculate the rate? What rate are we going to use here to make sure we get the exact figure in the question? We are going to say 663,981 minus the scrap value in the question. That is 63,981 minus 5120. That one will give us the figure for the depreciation for the fifth year, because we are trying to avoid rounding up that may disrupt the balancing of the balance sheets. So that is what we are going to do. Now, we are not going to use the rate 25%, but if the figure you got is a round figure like 25% exactly, you will use it and it will work out. But if it's not a round figure, this is the formula. Beginning balance of the last year minus estimated useful life in the question will give you depreciation 15,881. And the accumulated depreciation will be, and the closing book value will now rhyme or be exactly with the estimated scrap value in the question, which is 5,120. Hope you understand the tutorial. 5,120 becomes the net book value. So, see, with the question that we are asked, first of all, to find the rate we've got need to be 25%. And another question we are asked, now, let us find out why these people did not get that question. Monica used the formula beginning book balance for the last year minus the scrap value in the question to get the depreciation for the last year, which is 15,881, which is the correct way of to apply when you do not have a round figure rates. Francis also used the same method and he got the same balance. Casimir forgot to use it. He used 25% to multiply the beginning book value for the last year, and the depreciation he got is 15,820, which make it not to get it. He did not get the exact figure. Also, Abdul, that is what he did. So you have to note the reason why you may not get it correct. The people watching out there should take note of this tutorial instruction. Take note of this adjusted depreciation for the last year. It is important. Otherwise, the final account will not balance regarding the balance sheet, because the net book value of non-current asset are item that is going to the balance sheet. And if there's anything wrong with the rounding up, it may disrupt the balancing of the balance sheets. On this note, we come to the end of this tutorial. In our next tutorial, which is going to be the net depreciation method, which is uh, unit of the year, digit of unit of the year, we also exploit it. Thank you for learning with us. Like our tutorial, like our channel, like our tutorial, share our tutorial, and at the same time subscribe to our tutorial, so that anytime we are out with any tutorial, you will be informed. Thank you for learning with us. Until the next tutorial comes, keep fit and take care of yourself. Bye.